securities law.
Yeah!
Woo!
As,
How many of you are engineers?
I could be one.
Business side, finance side? Okay. So I am the founder of Hack Fund and also the CEO of an organization called Hackers. Can you guys hear me okay? I'll just do it like this. I'm the founder and CEO of an organization called Hackers and Founders. Several years ago, we ended up...
You think it works?
No, negative. Several years ago, we actually ended up having a set of meetups in a bar in Sunnyvale, California. Those meetups went viral. They've now been held in about 150 cities worldwide. And we've had several 100,000 tech entrepreneurs attend Hackers and Founders events. And the biggest pain in the ass that we've actually had for a lot of these companies is actually how do you raise capital if you are in Lagos, Nigeria? How do you actually raise capital if you're in Uruguay and you have an amazing technology to bring it to market? How do you actually capitalize these companies? Go ahead and do a slide. Because I'm a community organizer, we get involved in some weird things. Like I have a mailing list of 15,000 nerds here. And so about 8 years ago, there was this boneheaded law called SOPA and HIPAA that was going through Congress. And I got flooded with emails saying, Jonathan, they're going to break the freaking internet. How do we have to organize a protest. So I Googled how do you organize a protest, and a day and a half later, we were in front of City Hall in San Francisco. Go ahead. Do one more slide. Dun, dun, dun. Can you guys see that? Go back. The SEC turns into the Death Star. So we worked with the Obama administration on things like comprehensive immigration reform because I actually got really tired of seeing my friends who were CEOs of companies who had dozens of employees get deported. Let me say it again. I got sick of seeing my CEO friends who had dozens of employees get deported. So we worked with the Obama administration on comprehensive immigration reform. We know that that went great. That was a joke, you don't know. And we also, they included us into the Jobs Act and equity crowdfunding, and I said, yes, fantastic. How do we help more small businesses actually raise capital, and how do we tweak the laws to actually get more access to capital to small businesses? So we submitted 80 pages of comments to the SEC on equity crowdfunding. Yes. We were actually quoted by the SEC in their regulations about 40 times. And Commissioner Stein bumped into me in a hallway at an event, and I said, how can I help you guys with what you're doing? And she said, help you? I'm like, yes, I love what you're doing on this equity crowdfunding. There's thousands of companies that actually are desperate for capital. She's like, let me get your card. 6 months later, I went through a security clearance process. I passed the security clearance. And we actually started I got invited to join an advisory committee at the SEC. I was the only guy with a ponytail in the building. I actually had a suit made, so I don't look as fly as I do now as when I was in DC. But we actually look at why so much capital gets invested in Silicon Valley and why so little capital gets invested in the rest of the country, i.e. the rest of the world. And really, it comes back down to what LA Token is trying to solve is liquidity. 85% of the world's mergers and acquisitions happen here in Silicon Valley in the world of technology. So 2/3 of the world's venture capital gets invested here in Silicon Valley. Here's where investors can make money in their investments in technology. It's really hard unless you actually have a liquid ecosystem to actually do that. So we've been working on this liquidity problem for a number of years. We took a long time actually looking at what would it take to actually create a digital version of a stock certificate, a security token. We spent about 2.5 years on that and came up with the organization that the regulatory aspect of this is going to be a shit show. But because we are a very large community of entrepreneurs, we've actually decided to start providing some education on securities law for hackers. Go ahead and go two more slides. Why can't we have nice things? Because of lying, cheating, and stealing. A lot of us, how many have actually been defrauded in the crypto markets or actually been scammed or had someone try to scam you guys? It's okay, I have. Like 3 people reached out to me this week saying, oh my God, I'm Jonathan Nelson. Can you actually help me get your Cardboard wallet? And I'm like, no dude, I'm Jonathan Nelson. Go ahead and fast forward a slide. So let me try to, securities law is something that seems very, very, very abstract, when you actually pay securities lawyers about $1,000 an hour, no disrespect to my lawyer friends, but when you pay them $1,000 an hour, they don't want to really write in plain English so that it's easy for you to understand. They essentially want to write it in legalese. And so I tend to think, I'm a software engineer, I tend to think of securities law as code that actually runs the government machine. It's a lot easier to think about it as, computer code, software code. Python actually makes a computer work. Legal code makes the machine of governments work. Legal code is created by legislatures and courts. This was mind-blowing to me. It's not just the legislature, the Congress that actually submits legislature and actually gets made, but courts actually say, no, this is new law too, which was kind of mind-blowing to me. This law is actually enforced by the engineers in the room, the compiler, as it were, that enforces these rules, are a number of three-letter agencies. Many of them have guns, and they definitely have access to prisons, so I like to follow securities laws. That's just me. Next slide. For the engineers in the room, law is an interpreted language, and it's not as hard and as fast as we would really like it to be. Like people who are interested in writing computer code, it's very kind of binary. It's on, it's off, it's black, it's white. The machine works or it doesn't, it compiles or it doesn't. But legal code is a lot squishier. Go ahead and slide. There's a type of, it's called duck typing. If something looks like a duck, and it quacks like a duck, and it waddles like a duck, chances are it's a very good. If it looks like a security, and if it sounds like a security, and if it acts like a security, it might be a good. You guys are smart. Go ahead and hit the slide. If you actually break down the securities law, there's really a couple of major divisions. One is a commodity. Two is there's securities. And then three, there are, slide got tweaked a little bit. So there's securities, there's commodities, and then there's money. Those are kind of the three financial instruments that our government is actually able to actually think about and work on. And they have different divisions that actually respond to each one of those three different commodities, or three different types. Securities is run by the SEC, Securities and Exchange Commission. Commodities are managed by the Commodities Futures Trading Commission. And FinCEN regulates money and banking, and they are financial crimes enforcement. If I had my druther of who I would actually want to be regulated by, I would probably choose number one, the CFTC, number two, the SEC, and last, I certainly would not want to be regulated by FinCEN. To get a license to be a money transfer agent in the United States, you have to get a license as per FinCEN in every state and US territory that you operate in. There's about 58 of those. $1 million times 58 is $58 million to essentially get a banking license so you can transfer money. A lot of engineers are saying, no, dude, it's not a security, it's, well, the SEC is going to say, is it a security, is it a commodity, or is it money? Pick your regulator. And we're like, but it has all three. It's kind of like, it's not that easy. It has the features of all three. Okay, so all three of them will regulate you. No. We're unregulated. No. Slide. So in programming, there's this thing called a log function. So you can essentially look at the log of who actually changed the computer code that actually runs this program. Let's actually look at some of the log where our securities laws came from. In 1933, there was, well, in the teens and 20s of this year, there was this new invention that really created a boom in financial speculation. It was called the telephone. In 1920, about 60 to 65% of the country actually owned stock. So they could go to a broker, they call them bucket shops, you could go to a bucket shop, and you could actually buy stock and sell stock. The problem is that the brokers could then call their friends in New York City and say, dude, this guy just bought 1,000 shares of IBM, buy a bunch of IBM before I actually execute this order. And then when the Great Depression happened, people got really sick of being defrauded and cheated in this market, the lying, the cheating, the stealing. Securities were roughly fairly unregulated in the 200 years prior to this. Stocks actually active. We've had stock markets for about 300 years. Mind-blowing. Basically, the Securities Act of 1933 was one of the first laws that President Roosevelt actually put in exchange that said, look, dude, if you're going to actually sell a security, you can't lie, you can't cheat, you can't steal. Oh my gosh, that's so hard. I'm sorry, you can't do that. And that you also need to provide some sort of financial disclosure and transparency. Slide. Then came the Securities Act of 1934. We actually need a governing body to actually regulate this new market. So we initialized this organization called SEC. We gave it a lot of enforcement powers, and we also said, hey, what if we actually call this weird loan type thing that we've been doing a security as well? So we created another type of security called bonds. In 1940, the government actually was looking at a bunch of people wanted to bundle together these different types of securities and essentially sell shares in the bundles. And so they actually ended up coming up and basically kind of invented a fund industry. And so the Investment Company Act, these are legal entities that just focus on bundling different assets and raising money to bundle different assets and to sell them. And this is what actually would regulate, for instance, something like hack fund if we were to actually IPO in the United States. These are mutual funds, these are REITs, these are ETFs, these are venture funds, all of that sort of stuff would fall under the 40 Act or be excluded from the 40 Act by one of the exemptions. Slide. And then, remember when I said that laws could be written by the courts? So, in 1948, and I like to think of this as the courts are kind of like a bug exception handler. They essentially find bugs and help resolve the bugs in our legal code. So there was this dude named Howard. He was in Florida, and he had this thing. He had this orange grove, and he had this kind of elaborate plot where he was going to buy orange groves from orange farmers and then sell them shares in the orange grove, and then they would receive profits in the orange grove. And if Mars was in conjunction with Venus in the lower third of the sky, everything would actually lie right. And the orange grove owners would make tons of money guaranteed, right? The SEC said, this is a security. And Howie said, no, dude, it's not a security. It's an orange grove. It can't be a security. Securities are stocks. And the SEC said, no, we're going to take you to court. The Supreme Court actually said, dude, your orange grove, your little scheme here, that's a total security. And he was very, very upset. But the judgment, SEC versus Howie, essentially gave us the definition of what is a security. Slide. And then, I'll go back to that in a little bit. And then we actually have the Jobs Act, which was actually one of the biggest changes to SEC securities laws in decades. And basically, you have to scale how much financial transparency you have with how much money you raise. And we'll talk a little bit about the types of different kinds of equity raises that you can do in the United States under these securities laws. Slide. So what is Howie? Slide. The Supreme Court's definition is a contract transactional scheme whereby a person invests his money in a common enterprise and is led to expect profits solely from the blah, 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 blah. Slide. As I said, I pay a lot of lawyers a lot of money, and then I try to understand what I'm being told. And so, let's define this in plain English. If the buyer of your thing expects to profit from your work, then I'm sorry, your thing is a security. Howie had an orange grove. The buyers of his orange grove expected to profit from Howie's work, so I'm sorry, your thing is a security. If there's anything that I want you guys to take home in the United States, this is the definition of a security. So read this with me, in unison. If the buyer of your thing expects to profit from your work, I'm sorry, your thing is a security. If the buyer of your thing expects to profit from your work, then I'm sorry, your thing is a security. If the buyer of your thing expects to profit from your work, then I'm sorry, your thing is a security. Woo! Thank you. I'm doing a show in the bar this evening. Security is the security covering. Security's not covering. Next slide. So let's put this in kind of like computer-ish code. Let's create a function that says, is a security? And this function is going to define, is this, whatever I put in this, is it a security or not? So we have a buyer and a thing, right? If the buyer of your thing expects your profit to increase, then true. This is a security. Otherwise, false. So let's go ahead. If Jane wants to buy a loaf of bread, is Jane expecting to profit from someone's work on the bread? No. So false. Go ahead. If Fred wants to buy a pony, is the pony a security? No. According to this definition, no. Right? Okay. If Joe Fu wants to buy stock in my fund, is that a security? Yes, very good. Why? Because Joe Fu would expect to profit from the work that I'm doing as a security issuer. So this would very definitely be a security. Slide. Anybody own Tether? Have you been following Tether? Woo! I love this industry. It's just so entertaining. It actually gives me the craziness in the crypto markets give me a little bit of break from the craziness in our political cycle, which is very refreshing. So Tether is a cryptocurrency that's supposedly pegged 1-to-1 to the dollar. So if you buy Tether, is Tether a security? No. Why?
Because it's written out there.
Very smart, sir. Congratulations. Jonathan said it, therefore it must be true. No. Jane is not expecting to profit from an asset that's pegged to the US dollar. Right? So that would not be a security, but that might actually qualify as money, and then you would be regulated by FinCEN, and the entry price, the cover charge for that is $60 billion. For that, you would really probably rather be a security. Anybody own Ripple or XRP? So, is Ripple a security according to this definition? How many of you who actually own XRP are expected to profit from the increase in appreciation of XRP because it's being used? We all are, right? It's very interesting to me because the SEC commissioner I was on the advisory committee, was Mary Jo Watson. She's now the lawyer for Ripple, trying to argue that it's not a security. I don't think it's going to have. There's a chance. I suspect they'll get their hands slapped. They'll say we're correcting it because of this and that and the other thing in about 5 years. The SEC also said something interesting. They recently said, about 4 or 5 months ago, that Ethereum is not a security. What? The fuck? I'm buying Ethereum because I'm expecting to profit from the work of the Ethereum work. Slide. But why isn't that a security? So the initial definition that we had is if the buyer of your thing expects to profit from your work, then I'm sorry, your thing is a security. If the buyer of your thing, who is the you that you're buying the Ethereum from? And who is the you that you're expecting to actually grow? So the SEC came out, and this was actually a very nuanced interpretation. I think that they've actually done a very good job at this. They said, if you can't figure out who the you is, because it's too decentralized, it's not a security. It's probably a commodity or something else, but we don't really care because it's not us. So let's correct our initial computer formula. We're going to have the buyer and another thing called you and the thing. If the buyer of your thing expects to profit with Ethereum, we would all expect to profit from the work of whoever in Ethereum. Return true. But in this case, it would return an error message saying it's not a security. So let's go to else and accept, let's say an exception handler handles an error. If you isn't defined, if you can't actually define who is the you that issued Bitcoin, who is the you that issued Ethereum, then the SEC says, you know what, you're not a security. You're good. So, slide. What the fuck are we supposed to do as entrepreneurs? If you're in the United States, this is US securities laws. One of the things that's been mind-boggling to me when I've been working on things like internet and governments is that they have this weird concept of a border. Like, if I'm typing on my computer, do I care really where the server that just sent me that web page is actually located? I don't. It's the internet, dude. The internet is borderless, man. Like, it's just this one world communication network, man. There's no borders. But governments are very interested in that sort of thing because governments exist to enforce laws in those borders. So in the borders of the United States, what do you have to do to actually work with blockchain and securities? First of all, you can't lie, you can't cheat or steal. Next. There's a couple of ways to actually issue a security in the United States without, and the type of reporting that you have to do is commensurate to that. The SEC also makes a distinction between rich people and poor people, or excuse me, accredited investors and retail investors. Accredited investors, the retail investors are the poorest 96% of the US population. The accredited investors are the richest 6% of the population. So, if you are issuing a security and you are only selling it to rich people, you don't really have to do any reporting. Rich people can afford to lose money. That's great. They want to invest their money in whatever, they can invest their money in whatever. Go ahead. With the Jobs Act, they came up with another distinction. They said you can sell to the poorest 94%. If you're only raising $1 million, then all you're going to have to do is to have a CPA just kind of review your financials. It's not an audit. Just review your financials, say, yep, there's financials. That gets reported, and then you can raise less than $1 million under Regulation CF or Regulation Crowdfunding. There's another one called Reg A. It's very rarely used. It's buggy, so I'm not going to talk about it. If you're going to raise less than $50 million, Reg A plus, you can raise from muggles, from retail investors, up to 2,000 of them. And all you have to do is report audited financials. You have to have a CPA say, yep. Now, the SEC also has to approve your issuance if you're going to raise money under Reg A. So you can actually put an ad on television and sell your security on late night TV as an infomercial if you wanted to. You can't lie, you can't cheat, you can't steal. You have to limit it to less than 2,000 investors, but you could raise up to $50 million that way. Completely legit. And you only have to report audited financials once a year. Otherwise, you have to go through this little process called an IPO, which is the initial public offering, which is basically you have to file an S1 statement, which is about 1,000 hours of lawyer time. Those lawyers are going to charge you anywhere, probably about $1,000 an hour. So you're looking at about $1 million, just ground rule, just to get the legal stuff done. You're looking at about another $1 million in accounting charges, and then you actually have to do quarterly financial reporting. And this is what a publicly traded company would actually look like. Apple, Google, Facebook, the rest of the 9 horsemen of the apocalypse. Sorry, I said that in Silicon Valley. Bad challenge. But basically, you can issue a security, be it a bond, be it whatever. You just have to do quarterly financial reporting. You have to report audited financials. And then anyone in the world can pretty much buy your security. You got insider trading, you got money laundering issues, that sort of stuff. But in the United States, if you're reporting quarterly financial statements, if you're audited, if you're reporting to the SEC, you can issue a digital security. Next slide. What if you're not in the United States? There's only about 178 other legal jurisdictions around the globe. I'm going to cover about a third of them. No, I'm not going to cover any of them. Well, we actually, what is the base compliance that you're going to have to do to sell security anywhere in the world? You can't lie, you can't cheat, you can't steal. Thank you. You have to do KYC and AML. Really part of the early stages of the crypto markets, one of the big use cases was on this shady website called Silk Road, where you could buy heroin, you could buy cocaine, you could put a hit out on somebody, and the FBI took very, very dim view of that, and they actually shut it down. But ever since then, the crypto industry has had kind of this shady connotation. So a lot of people actually said that there was a lot of money laundering happening in the crypto space. The last place I would want to launder money is with something that had a global digital ledger of every frickin' transaction that I've done. I'd much rather do something like, trade 500 euro dollars. Not that I'm recommending that, but I'm just saying those are untraceable, but blockchain stuff is not. Blockchain stuff is totally traceable. But you have to know your customer, you have to do anti-money laundering, because we don't like terrorists, and we don't like narcotics traffickers, and we don't like baby kidnapping, okay? Slide. IPOs don't really have to be that hard. So for Hack Fund, I had this vision of I wanted a venture fund. I wanted it publicly traded so that my whole global community could essentially buy $5 worth of stock in a handful of portfolio companies that we actually invested in. It's taken me about 2.5 years. I've talked with several dozen law firms. I've spent a lot of money on lawyers. Fortunately, I was an advisor to the SEC. Ding. So they will sometimes talk with me for free. Ding. I've also talked to about 9 different global stock exchanges. I would argue that by far, probably the 2 most interesting ones right now for crypto are London as well as Toronto. And in London, we are going to actually IPO this year, Q3. We're hoping to raise about $250 million in an initial public offering there. It's probably going to cost me maybe about $500,000 just in legal and accounting. They have a different framework where you get a Sherpa, someone who walks you through the process. They essentially look at your whole thing. They look at your audited financials, and they say, yes, this is copacetic. You can go ahead and do this. And so you essentially hire a person to do all that reporting for you, and that's called a nominated advisor or nomad. And that's one of the reasons why it's so much cheaper in London and why we're actually doing this there. Slide.
But that's on the secondary exchange.
This is on the AIM?
Yeah.
Correct. On the London AIM, you actually would have to do a bit more to go on the primary standard exchange. We're going to start off in the AIM, and then we're going to actually notch it up to the standard. The compliance costs are still going to be about 25% of what they would be in the United States. So, the one thing I wanted you guys to go home with was, if the buyer of your thing expects to profit from your work, I'm sorry, your thing isn't security. If the buyer of your thing expects to profit from your work, then I'm sorry, your thing is security. Last time, if the buyer of your thing expects to profit from your work, then I'm sorry, your thing is security.
Who knows?
I don't make the rules. I'm trying to explain them. I just don't want y'all to end up in jail if you're going to actually do blockchain in the United States. This is actually one of the reasons why a lot of crypto companies are just kind of going, woo, out of Silicon Valley. You're seeing a lot more work being done in the Asia Pacific as well as in Eastern Europe, and a lot more work in emerging markets. I would argue that the future of these technologies in fintech is building financial services infrastructure in countries that we don't have stock. We don't, we have money. Let's use money. Let's create something new with the digital thing, with the blockchain thing. That is, I think, the future of these technologies. And really, let's just try to follow the rules, because otherwise it's going to get a lot harder, and this thing that we love is going to become a crime, and then no one's going to use it, and that's really going to piss me off. And so, slide. We're IPO Q3. That's my LinkedIn QR code if you guys actually want to do that. And then I'm actually off in 10 minutes to go to London tonight to actually speak with the people at the stock exchange. But I think I have time for like 1 or 2 questions.
What do you do, and what are the use of proceeds from the IPO?
So the IPOs, we're investing in startups. So we have a massive global community of startups. This is actually our 5th fund. Our first 4 have been doing about 15 to 30% year over year. We will invest in startups, and we will invest anywhere in the world. Because we're liquid, my job is to increase my share price. How do I do that? I have to invest in companies that actually sell things, that actually have revenue and that actually grow. I'm something of a heretic in this town. I'm kind of old school. I like to kick it with companies that actually build companies. We have a portfolio with them. We have a portfolio of 60 companies already. Their market value of about $600 million. We've had 8 acquisitions. So this is really kind of a continuation of that process. the fact that we're going to be liquid, the fact that we're going to be public and then tokenized after that, is that we will be able to take money eventually from anyone in the world. We'll be able to actually invest that into startups. And then our job is to actually grow and make sure that these startups from around the world are producing revenue, growing at scale. Does that answer your question? One other question.
Hey, Jonathan. So as you know, with Andrew Capital, we're kind of taking a similar approach, but a later stage investment.
Yep.
Thesis. So what else have you seen, because you're out there talking to exchanges all the time, what else have you seen in Toronto and Singapore and some of the other ones?
So the London Stock Exchange actually just made an investment into a company that actually did back office services on blockchain. The Euronext Amsterdam exchange has actually been looking at blockchain stock certificates. They're concerned about the speed of transactions on the blockchain. Hong Kong haven't been actively investing as of a few months ago. Singapore has been pretty aggressive. Nothing against Singapore, but I think the marketing in the legislature and the government level is a little bit different than the regulators. For me to actually IPO hack fund in Singapore, I would have to live in Singapore for 5 years and I'd have to have $500 million under management before I could list a publicly traded fund. Toronto's been also very interesting. There's a reason why the Merchant Bank Digital Currency Group, DCG, Galaxy Digital, there's a reason why they actually IPO'd in Canada. They're actually just kind of a little bit more forward thinking about this, and they're also dual listed on Frankfurt. So the reception that we got there was fairly warm. If I had to do it over again, they don't have really a fund structure that you can list. You'd have to be an investment company, like an operating company that invests in individual companies as well. But yeah, and then if you're interested, I can send you a link. I did a kind of a global survey of securities regulations and blockchain around the world for Shares Post, and I can talk about that more in general. I think my time is up. Last one. Okay, promise.
I just want to know,
Could you please introduce yourself?
Oh, sorry. Introduce yourself.
Diane Strauss.
Hi, Diane.
Hi there. Sorry about that. I was just wondering if you are investing in all categories of startups or is there a certain genre?
No, we tend to do technology enabled, so we have a 3-pass filter that we've been using for years. The first one is you fill an application, you get rated and scored by other entrepreneurs. If your scores are high enough, then you'll pass on and you'll talk with a team of investors or staff. You get scored on your ability to actually do $250,000 a year in revenue in a Western market, or $250,000 $250,000 a year in revenue in a Western market, or $100,000 a year in revenue in an emerging market. If you score well on that, we'll sit down and we'll talk and we'll say, can we add value? We have a 25-person team in 3 different countries now. We have kind of this global network of entrepreneurs. So we can help companies move to Silicon Valley, open an office here, scale globally. We've helped some of our Mexico portfolio companies start to do business in the Middle East. We're really kind of global to global through Silicon Valley. This is kind of our thesis, connecting Silicon Valley to the rest of the world. But this is the need that our global community has actually said they've needed. When I talk to investors in Latin America, they're like, what's your biggest problem? They're like, oh my God, I need liquidity, please. Please, can you give me some liquidity? So we'll also probably use some secondaries from some of these other funds in emerging markets. And then my preference is to actually help companies IPO and then tokenize sooner rather than later. So we actually access global crypto capital markets, but that's not the road yet. Thank you guys very much.